All right. So now we are going to talk about accounting for defined contribution plan. And as I've said many times now, that defined contribution plan is where you know exactly how much I need to contribute. And then that, in a way, is what the obligation or liability from an organization standpoint. And then from an employee standpoint perspective, the investment risk or the actuarial risk, in a way, shifts on to the employee, and that is why they're called defined contribution plan, and in a way they are significantly different than defined benefit plans from that perspective. So when I look at the accounting, what is it we need to do? An entity obligation for each period is determined by the amounts to be contributed for that period. No actuarial assumptions are required because it's like short term where cash needs to be contributed to measure the obligation or the expense, and there is no possibility of any actuarial gain or loss because I don't have the actuarial risk. From an employer perspective, they don't have the actuarial risk. The obligations are measured on an undiscounted basis. An exception to the rule is when the obligations falls due after 12 months. You know, in that case, there can be an element of discounting, but they are in a way a pretty rare situation, right? So to say that it is a defined contribution plan where, let's say, I'm going to contribute after 12 months to a kitty, ordinarily we don't see. But in IFRS or in DS, I think the general thing which you should remember is that any liability, right, other than a non-monetary liability of the likes of income tax and all, you know, everything generally gets discounted, which is due right after 12 months from that perspective. So when you look at the recognition and measurement, so what to recognize in the balance sheet is contribution payable to the plan minus what's already been paid, and that's your liability, which is to be paid, or accrued expense or asset, as the case may be. When to recognize in the statement of profit and loss is when amount which is recognized for the period equals to the amount which has been, in a way, contributed, unless that is you've done some contribution in advance, right, which is extremely unlikely, or if that is eligible for capitalization, as what we've talked about under Ind AS 2, Ind AS 16, or Ind AS 38, or Ind AS 115, right? There could be multiple situations, right? Extremely unlikely of Ind AS 115, but here, but Ind AS 38, of course, right, is possible. Okay, now we will look at this case study, which is from May of 2019 for 5 marks. And again, I would like to re-emphasize this to all of you that uh, for you to acquire deeper understanding of accounting standard, right, it is important for all of us is to practice the principles, right? So we need to learn the principles and apply the principles to different scenarios, and that's where all these examples are extremely important and useful. So let's go through this. In 2017-2018, Diana Limited has around 3,000 employees in the company. As per the company policy, the employees are given 30 days of privilege leave, 30 days of privilege leave, right? 12 days of sick leave and 12 days of casual leave, right? So 30 days of privilege leave. So if I do here, PL is 30, sick leave is 12, and casual leave is also 12. Okay. Now, out of the total PL and SL, 10 PL and 5 SL can be carried forward, 10 and 5 can be carried forward to next year, right? On the basis of the past trend, it has been noted that 1,000 employees will take 5 days of PL. Now, 1,000 employees will take 5 days of PL, and and 2 days of SL, and 2,000 employees will avail 10 as PL, and then 10 will avail as PL. Um, and okay, we'll take 5 days of PL, 2 days SL, and 2000 plus avail 10 days as PL and 5 as SL, right? Number of data points, important for you to map all the data points. Also, the company has been incurring profits since incorporation. It has been decided in 2017-18 to distribute profits to its employees at the rate 8% during the year. Okay. However, due to the employee turnover in the organization, the expected payout of the Diana Limited is to be around 7% instead of 8%. The profits earned during 17-18 is INR 12,000 lakh. Okay, Diana Limited also has a post-employment benefit plan available, which is in the nature of defined contribution plan, where contribution to this funds amounts to INR 500 lakh, right? INR 500 lakh, which will fall due within 12 months from the end of accounting period. The company has paid INR 120 lakh to its employees in 17-18. Okay. What is the treatment for the short-term compensating absences, profit sharing plan, and the defined contribution plan by Diana Limited as per the provision of relevant India? So we have too many questions right here, which we need to look at. Let me just do this little nicely. Okay. So there are a number of questions, right? So we have to look at for compensating absences, we have to look at a profit sharing plan and the defined contribution plan, right? So now profit sharing is fairly easy, right? Which is to say that I'm making a profit of 1200 lakhs, 12,000 lakhs, and then I'm expecting to 7%. So in a way, of 7% of that, that becomes a part of my profit sharing plan. And then what else? Then I have defined contribution. So as a post-employment benefit plan available, which in the nature of defined contribution is fund amounts to INR 500 lakh, which will fall due. The company has paid INR 120 lakhs to its employees in 17-18. So in a way, I got to contribute to the balance to that fund, right? From that perspective. And then the short-term compensated expenses is where we need to compute. So let's just go through the solution one by one is what we're going to look at, right? So how many employees we've got? 3,000 employees, right? Total eligibility and then carry forward allowed, right? That is what we need to map out. So privilege leave, 30 days, and carry forward is 10 days, right? And then sick leave is you are allowed for 12 days. You allow a carry forward of 5 days. And then casual leave is 12 days and none is the carry forward, not allowed. And then how much we have availed, right? The past trends, 1,000 employees will take 5 days of PL and 2 days of SL, right? Is what we see in terms of the trend, which is what is available. And 2,000 employees will avail 10 days as PL and 5 as a sick leave. Okay. So we have some stratification available between these 3,000 employees. That 1,000 employees will take 5 days. So we carry forward of 10 days and 5 days. Where 2,000 will take 10 days and 5 days. So 2,000 employees are smart enough, right? They will fully utilize, right? Whatever is the carry forward which is available to them, right? And then profits earned during the year is 1,200 lakhs. Expected payout is 7%. And also the contribution is to be 500 lakh and I have paid 120 lakh. So now all the data points which were there in the question are being now tabulated nicely. And this is what you need to do as a first step, right? That you got to tabulate all the information so that you're not going wrong in your answering, right? It's important to kind of capture the information in a meaningful manner, right? So we have done so. Now we had 3,000 employees. We've got all the data now plotted. Now we have to compute right? How much is my provision for short-term compensated absences? How much is my provision for profit sharing plan, and how much I need to provide for my contribution, right, to the defined contribution plan. Okay, so let's look at the solution for short-term compensated expenses. Remember, we divided the 3,000 into two categories. So recognize a liability in the books as an unused entitlement that has accumulated in 1718 to the extent of 5 days of PL for 1,000 employees and 10 days of PL for 2,000 employees and 2 days of SL for 1,000 employees and 5 days of SL for remaining 2,000 employees. And since we do not have the data, right, in terms of the per day cost, we are not able to, in a way, quantify that, right? Now, for profit sharing plan, we will simple 12,000 into 7%, which is 840 lakhs, is what we will record. And for the defined contribution plan, we had to pay 500, whereas we've only paid 120. So I'm going to record that, right? So entity shall recognize the contribution payable to a defined contribution plan in exchange for that service, and the amount of 380 lakh, which is nothing but the difference between what I am supposed to pay and what I have already paid, may be recognized as a liability after deducting the contribution already paid, and 500 is the in a way is an expense, right? However, if the contribution already paid would have exceeded the contribution due for service before the end of the reporting period, you should recognize the excess as an asset, like a prepaid, right? So I am under no obligation in a contribution plan to contribute more than what is a predetermined value, which in this case is 500. Since I've already paid 120, the entire 500 will go to expense also, unless something go to inventory or something go to PPE or something go to intangible asset, in a way. From that perspective, also 380 lakh will be recognized as an expense over and above the 120, right? The entire expense is 500. Okay, so which is what we are saying. It has been assumed that 120 lakh paid to employees has already been recognized as an expense. Awesome. So I hope this example in a way gives you a perspective, or this case study gives you perspective as to how to approach the solution, right? Important for you. And if you see, a lot of this is just commonsensical, right? The approach here is that tabulate all the data point from the question in a proper order, okay, which is what we did in step one. Then we went out step by step to say, for compensated absences, this is what the likely utilization going to be, right? So I need to provide for it, but since I don't have the cost per day, I just kind of left it in a way narrative, right? And then I looked at the step two, which is determined for the profit sharing, and then I looked at step three, which is to determine for the purpose of defined contribution, and all of that is then what gives you perspective as to how to approach and provide answer in a question. All right, practice. That's very, very important.